The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I got two more stocks for your aggressive growth radar screen. So let's just get right into it. Our first stock is Shift4 Payments. Shift4 and then Payments, and the ticker is FOUR. It's a Zacks rank number one. That makes it a strong buy. And it's got that A for growth that just about all of my aggressive growth videos are going to see, and a D for value. And you know that I love that already because growth investors and value investors are inherently looking for different things. So when I see a strong growth score and a weak value score, I know that I'm headed in the right direction. Quick look at the chart here. We see the month of August was not good for a lot of stocks. This stock bottomed out at 54 and has started to move back higher. So let's run through the numbers that we normally run through. Okay. So first of all, I'm going to bring the size of that down. So we're beating the number, right? So we got 4 straight beats of the Zacks consensus estimate. But what we love to see with this is that these 4% beats then turn into 27% beats, then turn into 50% beats. So our trajectory is moving in the right direction. You know, when we look at a 25-cent beat here, 11-cent, absolute basis and on percentage basis, the numbers are getting better and better looking. So what does that do to, that's the past. What's going on in the future? Well, we see estimates for this quarter going from 65 cents to 71 cents, 64 cents to 79 cents, and $2.37 for the full year to $2.69. Next year, we're looking from $2.99 to $3.35, so that's a nice 10% raise there, a little bit better than that. Let's cheat a little bit here and take a look at our growth. Why are we calling these aggressive growth stocks? Big time top line growth. 30% this year, slowing just a little bit to 29%, but still we're looking at going over the $1 billion mark next year in total sales. Great to see something like that. So what are you paying for a company that does these payments like this? Well, 21 times forward earnings is right in line with the market there, but we see 25% top line growth, so you're right in line there. Asset slim tech company payment services idea, so a big price to book to be expected. Price to sales at 2 times, right around the industry average for that. But here's why we got to go into these individual names. You're looking at the margin growth. We're ticking up here from 2.8% to 3.6 to 4.3. When you see margin growth expand, go like that, move up, and you couple that with good revenue growth, that means that EPS is going to move higher. And generally, the market likes that, so they will give you a higher multiple. So it's a double whammy, if you will, of things moving higher. So let's take a look at the chart here for this one. Obviously, we're IPOing back here. We're running up out of control. It's the greatest idea ever. Then it's kind of like we've missed a couple quarters here. That's not good. Beat, but probably not that good. Then I screwed up. Then the tech problem for 2022, and this one came out of it a little earlier. Came up, down, and now we're heading back up. But what we should be focusing on in this chart is the distance between these earnings lines, this year-over-year earnings growth. It's going to stay strong. To me, that means we could easily get back to, once we get back to $3 in earnings power, the chart lines up for an $80 stock. So I am keeping my eye on this name, and just to repeat, it's Shift4 Payments, and that's FOUR. All right, the next one, we're staying in the tech zone, and it's WIX.com. Boy, oh boy, how many stocks used to have .com at the end of their name, and then they all dropped it. But WIX is hanging on there, hanging tight. WIX is the ticker. It's a Zacks rank number one. That's a strong buy. And what I love to see, growth divergence here, A for growth, F for value. Chart pretty much looks good here. They survived the month of August, where a lot of stocks had some troubles there. But WIX is that website. You want to make a website. You want to build a website. You want to do your own thing. You might be using WIX as your source for hosting and all those neat things for making your own website. You're going to go off on your own, do your own business. I know it's popular. It might become even more popular should there be a recessionary event. All right, so let's take a look at this. This story. This is what we see after you're going from the estimates calling for negative earnings and they produce positive earnings, and it's a big jump, big difference. And you're wondering, did Wall Street learn its lesson in 8 cents and then they post 61 cents for an outrageous beat? Wall Street didn't learn their lesson there. It's like another outrageous beat and then another outrageous beat off an even bigger base. So I'm liking everything I see on the earnings line there. It's just clearly that the company just keeps on crushing it. For the estimates, we've seen now they're starting to move up. They're starting to really believe the story here. So 47 cents to 73 cents. Again, 40 cents to 67 cents. The full year going from 231 to 335. That's great to see. And next year, the strength continues, $3 to $3.42. Let's take a look at the growth of this company. Pretty surprising that you only see 11% this year and flatlining at 11% next year. But that's great to see. There's continued growth. It's consistent. Consistent growth is great. Obviously, I know that the margins are going to be getting a lot better here because of the earnings increases. So we're paying 29 times. That's on the high side for 13% top line growth. We got an NA for price to book. I don't know why, but we do. 3.78 times sales. That's a decent amount. So here's your margin story. They're still backing out some things because this is obviously still a very young company making websites and all. So margin picture is improving dramatically, and we see it really on the net side here. But obviously, as margins increase and continue to increase in that fashion, EPS is going to go up. And this is the story here. Okay, so this stock got up to some highs, came in significantly, held through 22, and now we're beating rather big. But is the stock catching up to where it used to be? And when we look at these estimates, and it's one thing to see the distance between the lines. It's another thing, and I'm going to clear it out because my screen's getting crazy. It's another thing when you see these sort of things, everything's up, and like that. That is a good indication of good things to come. All right, so that's WIX, WIX. All right, be sure to join us next time when we look at 2 more stocks for your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.